It's essentially a closed-end fund.
Yeah, I mean, the real thing with the ETFs is that you can change the supply to meet demand, which is basically what Eric was saying.
So BlackRock announced a Bitcoin trust that will be publicly traded. They filed for it, still has to be approved, and eventually start trading. But one of the big questions that everyone has is, what are the differences between BlackRock's fund and the Grayscale Bitcoin trust that is currently trading out in the market?
Yeah. Okay. I mean, I'll give the broad strokes, and then James can give the fine tuning. The bottom line is this: the Grayscale fund is essentially almost like a private fund with limited shares. Those shares trade over the counter. And so it's very easy for those limited shares to have a price that deviates from the underlying price of Bitcoin because you cannot arbitrage the two. An ETF allows for continuous creation redemptions. Thus, if the ETF price starts to deviate from the price of Bitcoin, someone will arb that because they can always sell short the underlying and buy the ETF or vice versa. It's essentially a closed-end fund.
Yeah, I mean, the real thing with the ETFs is that you can change the supply to meet demand, which is basically what Eric was saying.